Time to tell you what's lined up on First Word today. Darshan Mehta first Johnson to take us through the earnings season now that we've reached the halfway mark with 25 out of the 50 nifty companies having declared the results. Nikki then takes us through the BloombergQuint cement dealers survey for the month gone by. Indigo Airlines decides to reimpose its faith in Airbus. PR Sanjay tells us how. And as consumer companies look to cut prices, do the commodity prices provide enough room for manufacturers to do so? Charlene's done the analysis. Important to take stock of what happens in the earnings. The second quarter earnings season has been one of more of hits than misses, really. This time, some of the 25 nifty companies which have come out with their numbers have also chosen to opt for lower corporate tax rates, thus giving their bottom line a bump up. Darshan Mehta is here to take us through the earnings season thus far for the Nifty 50. Darshan, good morning. How's it looking?
Yeah, good morning, Neeraj. So I was just seeing the data. So it's the best start that we've had to the earnings season since the fourth quarter of FY17. So it's been almost 10 quarters since we've had, after 10 quarters, we've had such a stellar run that's there. So 25 companies have come out with numbers, and you can clearly see just 2 companies have reported big set of numbers, 11 strong and 12 were in line. So, and as you pointed out, a lot of companies took corporate tax. Our analysis of a strong, weak and in line is based on the operational performance, not the profit number. So that's how we take it. So it's been good. You can see the trend that's there for at least for the past 5 quarters. The number of weak earnings, which in the last quarter was 11, has come down to 2, and the number for the strong earning has reversed. So you can see that 1 quarter made a lot of difference, and a lot of auto and banking names actually made back of this. Let's take a look at the heat map to see which were the companies that actually came out with a strong set of numbers. So you could see all the auto companies here, Hero Moto, Bajaj, Maruti, Tata Motors, all of them were strong set of numbers. There was Bajaj Finance, which continues to do well. Again, the corporate facing banks, ICICI, Axis, SBI, all of them did well. You had Wipro and HCL Tech, which managed to do well. The 2 largest companies on the Nifty by weightage, Reliance Industries and TCS, did manage to disappoint this time around, while the others were pretty much in line with estimates. So this is as far as the operational performance was concerned. Some bit of information as far as the EPS numbers is concerned, which were the companies that missed the EPS as far as, and this is obviously a lot of corporate taxes will also play an impact here. So Axis Bank came out with a negative EPS because of a one-time expense. ICICI Bank also came out with lower because of a tax deferment that happened. In Reliance Industries, Ultratech and HDFC Bank came out with lower EPS estimates as compared to what the Bloomberg had suggested earlier. And in companies which actually came out with better EPS, Tata Motors, despite a loss, the estimate EPS was a negative 0.5 rupees. They've come out with a negative 80 paisa. JSW Steel came out with a much higher because of a one-time gain that they had. You had Bharti Infratel, Maruti Suzuki, as well as Z Entertainment, which came out with numbers which were ahead of what was there. So this is the general trend that we are seeing.
If we try to nail it down to individual sectors, Darshan, how has the performance been? That's the key question.
Yeah, so let's start with the first one, and that's the auto, and that's the biggest impact that we've seen. Very, very strong set of numbers coming in from the auto space. So all of them coming out with numbers which were a beat. So Bajaj Auto was a big beat. They had higher exports, and the dollar realization helped them significantly. The recent price hike and lower input cost aided Hero MotoCorp. Maruti Suzuki, obviously there were lower other expenses and input cost, but overall forex gains, but that aided them. And JLR was a big moving factor on Tata Motors. So auto, all 4 of them came out with strong set of numbers. The next sector that we want to talk about, that is the cement sector. Ultratech, higher realization was there, and there was reduction in cost, and that aided the numbers for Ultratech. The other counter that we want, the next one, is L&T. Inline set of numbers. The management commentary was slightly muted. The infrastructure orders was seeing a little bit of decline. Private sector capex has not picked up, and L&T, even though the numbers were in line, the outlook was quite muted for the company. Again, you're seeing JSW Steel this time around. The realizations was much lower the raw material costs were much higher this time around, and that impacted the numbers for the company. FMCG as a space has come out with inline set of numbers. You had HUL. Input cost had actually boosted the margin, but the volume actually saw a bit of slowdown that came in. Asian Paints double-digit volume growth, and the mix, the margins was impacted by because of the mix, which was on the lower side. The putty business, the low margin business did well, and cigarette growth was steady. FMCG didn't do well, but the other hotel industries and the paper business did well for ITC. So that's the consumption theme. You had Reliance in Industries. Obviously, as far as the petchem business is concerned, that was some refining business was the big disappointment factor for Reliance Industries. The consumer-facing business did well. On Jio front, there was strong subscription growth, but the average revenue per user fell for Reliance Jio. So that was Reliance Industries, the only oil company that's come out. As far as telecom is concerned, you had Bharti Infratel, which actually came out with strong set of numbers. The higher exit charges were there, and the rentals fell in for the company. So that was Bharti Infratel. Some other sectors that we want to talk about, and that's the banking sector. HDFC Bank, ICICI, SBI, all of them came out with strong set of numbers. SBI saw big improvement in the asset quality. ICICI, the operating performance was very healthy, and HDFC Bank always continues to surprise, comes out with inline set of numbers. On the other side, Kotak Bank, the NPAs inched upwards, so it has been underperforming. IndusInd Bank was in line with estimate, but the asset quality was stable, but the loan growth was the problem for IndusInd Bank. And Axis Bank, the asset quality improved, but the slippages were elevated this time around, but strong set of numbers coming in from them. Bajaj Finance, Bajaj Finserv, all of them strong set of numbers. AUM growth was strong. Bajaj Finserv also had the tie-up with Axis Bank that boosted, that probably helped the analyst come out with better set of estimates. IT, TCS was a disappointment that came in. Wipro said that the macro uncertainty continues. The hike guidance came in for HCL Tech, and Infosys, only the lower end of the guidance was hike. As far as the numbers were concerned, were in line with estimates. Few remaining sectors that we want to talk about, and I think this is the last one, that is the entertainment. Numbers were decent. Intercorporate deposits led to losses, negative operating cash flow, and cash flow statement was not reviewed by the auditor. So while the numbers were in line, I think the balance sheet issues continue to weigh in for Zee this time around.
Clearly, Darshan, the one thing that has stood out is autos, right?
Yeah.
Beat by most of the large companies having come thus far, and that's the exception to the rule, really.
Yeah, that is, autos did very well over the past few quarters. We've seen that auto has always disappointed. Only I think Hero a couple of times managed to meet estimates, but this time around the number beat is by a very, very large margin.